All right, Ken Orange Theory Trader coming with a quick lesson showing the best way to add two candle three trades on the daily chart. So could also work for the 8 hour because you're looking for the same style of price action, but I'm just focusing on the daily because it pays better, quite frankly. So best trading hours for the daily, remember they're starting at about 6:30 or so p.m. Eastern Standard Time to about 5 a.m. Eastern Standard Time. Can it go later? Yeah, but that's what I try to stick to. But let's see. Let's start with the pound Aussie. So the candle one was Monday, candle two was Tuesday, candle three was Wednesday. So we're going to do the replay on Wednesday. We take our entries on the 5 minute chart. And the price action that we're looking for again is price has to close below the low of our entry candle if we're short. So, I like to see the first fair value gap. I always try to enter off of that because I look at this fair value gap as proof that there's momentum in the trade. So let's just say if I took my first entry right here at 18 or 6:45 p.m. Eastern Standard Time, right there. Okay. I cannot take another trade unless the low of this candle, okay, because this red candle made me get in. Let me make this nice and big so you can see. If this red candle makes me get in right there, okay, and obviously it would have spiked against me if this was my real entry. So that's why you wait and you can split your risk. So if I'm risking 25 bucks, if I'm risking 50 bucks, I risk $25 on this position, but then I can't take any more trades until price closes below the low of this candle. And that includes the wick. If there's a wick there, same thing. So below the low doesn't come until 7:10. This red candle right here, when this red candle closes, that right there would make me get in. That's the second entry right there. All right, so in terms of risk to reward, you could have got away with like a 10 pip stop loss on the first one. That could have been like that there. Like that. Stop loss goes above the first fair value gap. And then the second one would have been about a 12 pip stop loss. I keep the stop losses in the same place, but the risk the same. Meaning that this would be $25 worth of risk as well, but the position size may not be the same. So same amount of money, but different position size. It will be close, but not exactly the same. Okay, both of these turned out to be about 1 to 5 trades. As you can see, it dropped like a rock. And like I said, about 1 to 5. So if you were risking 25 bucks, obviously 25 times 5 is 125. So this would have been good for 125, and this would have been good for 125 for about 50. So risking 50 bucks, okay, 25 and 25 to get 250, that's pretty good in my mind. But remember, we don't add until we see the bottom of our entry candle get closed below. Okay, I do not recommend averaging down. Okay, I don't. So that was that one. So we'll get rid of all this. Let's go to pound CAD. Well, actually, you know what? That's short too. So let's just do euro dollar because this is a long example. All right. So I'm not euro dollar, but euro yen. All right. So let's get. Well, we don't have to get. Yeah, let's get rid of all these indicators here real quick, and then we'll do the basic one. So candle one was on Friday of the prior week. Candle two was on Monday. So candle three was on Wednesday. And it broke out of the range and kept right on going. But we're only going to focus on this one. This is candle three. That's candle four. We're not talking about candle four. We're only looking at candle three. So let's do the replay option. And we'll go down to the 5 minute. We're going to find that first fair value gap on the daily. I start looking for entries around 6 or so. 6:30 or so when the spread calms down. So here's the first fair value gap right here. So I'm not going to act like I would have caught this entry on the retrace. Probably not. Let's just say we wanted to see it come out of the gap. So first entry would have been at like 650 right there. Okay, now let me make this nice and big so you can see. Cool. So this is my litmus candle now, okay? I need the high of this candle to get closed above. All right. This candle here came close, but not quite. Okay, because it needs to close above the high of this red candle, which is here, this wick. I'm going to put a line on it so you can see that. Right here. Okay, this candle came close. And could you enter that? Yeah. But at the same time, that's if you're sticking to your rules, if you're dogmatic about it, your second entry would be here, right there. Okay, and sometimes you'll have bigger candles. It is what it is. Not every second entry will be very close to the other one, but the thing is, your entries don't have to be perfect. They just have to be profitable. Now, in terms of stop loss, this is what you can do in a case like this. If this one here, let's say you put the stop loss below the fair value gap, so that will be about a 13. Let me see here. Where did we get in at? Yeah, right here. Okay, so if we're below the gap here, about let's just say a 13 pip stop loss, all right? And then our next entry would be right here. So if you want to put the stop loss, say below the entry candle, that's about a 15 pip stop loss, all right? So if we're aiming for, let's say like a 1 to 4, obviously it skyrocketed, we can see that, so it went more than that. But we'll just say a 1 to 5, just to keep it consistent. So 1 to 5 on this pair would be right there, even though it went for more than that. And if we kept the profit targets equal, so let me make sure. No, I'm sorry, that's 1 to 3. I apologize. I was looking at the pips instead of the return or the risk to reward. This is 1 to 5 right here. Okay. And then on this other one, 1 to 5 would be here, right there. So if you want to keep this the take profits the same, you can, or if you want to be rigid about it, it's up to you. Me, I get out of everything at the same time, typically. Um, that's just me because I'm in and out, So this spike up here would have been more than enough for me. Once price moves up this quickly, I don't expect much after that. And as you can see, it just consolidated the rest of the day. So this was your profit taking opportunity right there after all of this consolidation. So you could have got 1 to 5 out of that. So once again, if you're risking 25, that would have been good for 250. Okay, if you split the risk, so you risk a total of 50 to get 250, even though it would have been much more. So, but again, that's up to you. Okay. So remember though, the main rule though is that you're waiting for price to close above your entry candle. Whatever candle you get in at, even if it was down here, let's just say if you were a straight risk taker and you got in on this candle here, then your second entry would have been right there because it closed above this entry candle. Whatever your entry candle is, it needs to be broken. Okay, and then you just go ahead and enter again. Stop losses go where they go, and then you just see what happens. And I would just say as long as this gap holds, the trade is valid. And that's how I would look at it. All right. So, but that's how you scale into the daily chart candle threes. Hope you got some value out of that. I appreciate your time and attention, and have a great rest of your day. Take care.